Thanks for tuning in. You're watching Your Trades. We have Mr. Ajay Bagga to talk about the fundamentals of the economy, macro factors, and Rajesh Palia to give us a direction on the technical front. Ajay, tell us, Mr. Bagga, since we know that macro factors have been weighing on Indian markets so far, but now will earnings be the bigger trigger? Since we are going into earnings season with a muted set of expectation, but clearly wherever we could see a earning visibility, maybe in the form of business updates, be a scenario like dollar index is on a surge, but still meta counters are not at all nervous because we do have business updates coming in from metal and mining space also. The kind of business update we saw from Avenue Supermart also. What is your reading on the upcoming earnings season?
Spot on, Priyanka. Even your opening comments and what you just said, markets are right now primed for a very poor earnings season. But what has happened with the quarter two numbers already, a large part of the downgrades have got factored in. And as the monthly operational analysis has come out, more and more the expectations have got very muted. So we could see that any positive swing by companies above the expectations will be an outlandish move in the stock. So right now, the good news is that the market is very sober, very pessimistic. Nearly the street consensus is emerging markets do poorly, strong dollar, lot of Trump uncertainty, and all that will lead to poor FI flows into emerging markets. India is also seeing that dampener along with elevated valuations for India and poor quarterly earnings season and expectation of two more earnings seasons like that. So that sets us up for a market surprise on the positive side. Now, how much will companies deliver? That we will know in the next 3 weeks. We have two big events coming up. One is the earnings season starts next week, and second will be the budget. Again, budget, unfortunately, we see more tamasha, more talk than actual on the ground analysis. But the institutional investors, the kind of numbers they need is the fiscal deficit, the quality of your revenues, quality of your expenditure. How much are you going to put in capex? It's a 5-minute exercise for institutional investors, but we will get it known in a very drawn out cycle over the next 25, 28 days. So that has to be gone through. So I would say earnings, budget, and also what does Mr. Trump do? The sobering assessment is that despite having very strong control of all three levers of power, the Congress, the Senate, as well as the White House, the majority and the intra-party unity is lacking. So today we will see how the speaker elections go through in the US House of Representatives. And there again, with one or two Republicans not voting for Mr. Johnson, you could see a logjam happening. And that will constrain Mr. Trump from his early day policies. So that could take time. But the market consensus is rampaging dollar, high US yields, Fed holding its hand, and FI flows getting constrained because of that. A lot of this could be surprisingly turning out to be much milder than where the market is sitting today. So I am hopeful because we have seen this miscalculated kind of certainty earlier in the markets. 2022 September, October, 65 out of 65 economists said there's a recession coming in the US economy in 2023. And about 26 months later, we have one of the strongest US economies running around. So this year we are going in with a very strong US exceptionalism on economy, on flows going into US stock markets, outperformance there, and we could be surprised and money could come into emerging markets. So let's wait and watch. But the street consensus is sober on India. I would go against the consensus.